Hello guys, welcome to my YouTube channel. My name is Samuel and this is going to be another episode on my top-down analysis for every week on GBP USD or other um, forex currency assets. Um, Please, if you're new to this channel, I would really appreciate you supporting me by subscribing to this channel. It's going to help my YouTube channel grow. So for every new subscriber, smash that subscription button. It's free, and make sure to turn on the bell icon so you stay notified on every video that I upload. And basically, I'm a growing YouTuber, as you can see, and I would love to hear your opinions on how I can improve my videos. So without further ado, I'm going to get into the video. So basically, this is a chart. This is a monthly chart of British pound US dollar, that's GBP USD, or popularly known as cable. If you did saw my last video, that's my first trading video on YouTube, on this YouTube channel. I made this analysis the last time. I did this price action analysis and told you guys, I called it out to you guys that I would want to see this. In fact, I drew like a rectangular box. If you can see, it's still hovering behind right here. See, I drew that. I was expecting price to come down and then drive upwards. So if I quickly scale down to the weekly time frame, you'd see I called this out the last time that I wanted to see this. I wanted to see price did what for this week that we just ended. I wanted to see price come right down into trade down into this order block right here, and then we drive upward. So basically the video I did was on how to frame your trade for each week when you have a directional bias. So basically it will help narrow down your trades to specific directions, and you're going to be trading up, or you're going to be trading off those perception or off your directional bias for every week. So just like I said, I called this out on YouTube, in my YouTube video the last time. If you the link for the video is what you're seeing over right now, so you can check out the video. And I said I want to see cable. That was why I drew this this box right here. Exactly what I was expecting happened. I called this out. I said I wanted to see GBP USD for this week to open, then trade down into this order block right here. As you can see, I drew this order block, and then I want to see us respect it, and then we can start seeing higher prices. So for this week I want to see higher prices on cable, that's GBP USD, because like I said, I wanted to see what I wanted to see, and now seeing as much as we are respecting bullish PDRAs, now I'm going to be looking for buys. But on a quick note, so there's a particular setup I would want to show you guys in this video, a setup that I saw that I would have taken based on my weekly outlook, based on my weekly draw. And the setup I'm going to show you why I wanted to take that trade, why I thought the trade is going to be a high probability trade. So first of all, like I said the last time in the video, that based off every trade we have to do our analysis from the higher time frame down to the lowest time frame. So in this particular video, I'm going to show you my directional bias from the monthly, weekly, daily, 4-hour, and then I'm going to be showing you why I want to take the trade on lower time frame, why I was able to take the trade. So let's quickly get into it. So like I said, on the monthly time frame, we were respecting bullish PDRs. As you can see, we have this fair value gap created here. This is what a fair value gap means when we have 3 candles all together, but we have the low of this candle and the high of this candle not overlapping. When they are not overlapping on the sides, the low of this candle and the high of this candle, as you can see, there's this body of this candle is not overlapped by the wick of these 2 candles. So this right here is a fair value gap. So as you can see, price retraced into this. We respected this fair value gap, and we started driving upward. We created a high here, a monthly high here, and then price did what? Price quickly retraced, created a monthly low, and we traded up. We have this order block, and we did what? Immediately after creating this order block, this is a bullish engulfing candle, and yes, an order block. So once we had this, price did what again? If you look at it, price retraced into this fair value gap. We created a fair value gap and another block. So price retraced into this order block, fill this fair value gap, and at the same time, if you take your Fibonacci retracement to check from this candles body's close, open rather, from this swing low, so the close of this the open rather of this swing low to the eye of this consolidation, this eye right here, this monthly high, then if you look at it, this retracement falls into the optimal trade entry, ICT optimal trade entry level, and then we started trading higher. And as you can see, also we have this bullish engulfing candle right here, which gives us this monthly order block. Price retraced into this order block, and we started respecting. So we keep respecting bullish PD arrays, premium discount arrays. So we're respecting this PD arrays, which means that we should keep seeing higher prices. This is why this is a conviction that, okay, for this month we want to buy or we want to sell. Are you getting it? So whenever you have this kind of overview, it will help scale your trade, and it will help minimize your losses. That, oh, you have a conviction, you have a strong conviction that yes, prices keeps going higher. So whenever you want to trade, you look for setup that fits your criteria, that fits in your directional bias, your monthly directional bias or weekly directional bias, and then you take trades based off that directional bias. These trades are often referred to as high probability trades. So like I said, we started going higher. We took out buy side liquidity here. All those people who sold right here, we took their liquidity right here, and price went up, took this, and then we started respecting bullish PD arrays. And yeah, when we got to this point, we saw that this is a monthly bearish fair value gap. This is a monthly bearish fair value gap. So price did what? Price closed above this. This is what I mean by closing. I mean the entire body of a candle closed above this fair value gap. Unlike this fair value gap right here, you see that the body did not close below. It's only the wick, which means we are respecting the fair value gap. We keep going like this, and then we got to this point. As you can see right here, we didn't respect this, so which means I want to see higher prices, but at the same time I did what the other time. I told you we are going to attack this month high, this January 2022 month high. So this is my next draw on liquidity. This is my next target. So I believe from this month of October, November, December, I want to see us get to this point to do what, to take out the buy side liquidity. All those people who went short right here, I want to take the liquidity that is resting above this this candle, this month high candle. So let's quickly get into the weekly time frame, because I didn't want to waste our time. So like I said, since we keep respecting bullish PDRAs, we did what here. This is the fair value gap, this candle, and this candle's high, and this bearish candle's low do not overlap this candle's body. They do not overlap this candle's body, which means that is a fair value gap. So price retraced into the fair value gap again, and then we keep going higher. We took out liquidity right here. So I told you guys that I wanted to see this because we have this bullish engulfing candle. Price went up, and then I said I want to see us retraced into this fair value gap, and also this. Let me take this off quickly. So I wanted to see us retrace into this fair value gap, and then mitigate this order block, this weekly bullish order block. And if we respect this bullish order block, then I believe we're going to start seeing higher prices from next week, and then we start heading for this buy side liquidity. That's the month high for January 2022 monthly candle. So guys, so like I said, there was a particular trade this week that I took. I saw the setup, and I want to share with you why I felt that setup was a great setup, and then why you should look out for that kind of setup. So let me quickly go to the daily. This is the daily time frame. So like I said, I was expecting price to come down, trade into this weekly fair value gap, and then mitigate this weekly order block. And then as you can see, we have this consecutive this is a lot of candles. These are a lot of candles, weekly daily candles, consolidating, creating what, engineering buy side liquidity right here, engineering buy side liquidity. So let's get into the 4-hour. So my weekly draw already, you guys know, because I knew I said it, that price, I predicted price to drop into this fair value gap. Remember, I have a directional bias on the monthly outlook. I wanted to see price retrace before we go higher, and on the weekly, I wanted to see price come into this fair value gap, the weekly fair value gap, fill it, and then mitigate the bullish order block. And if we respect it, I want to start seeing higher prices. So these are two convictions. These are things that I want to see. So that is my draw on liquidity. I believe that price is going to drop towards the weekly fair value gap and the weekly order block. So now I'm going to look for setup that are going to align with my directional bias and take trade based off that bias. And I don't necessarily have to predict, I don't necessarily have to get where price is going to close for that day, but whatever trade I take and whatever profit I'm able to make off that trade is enough. So right, so let's get quickly into this. So like I said, so we had at a point when price was somewhere around here, we started engineering liquidity. As you can see, these are a lot of liquidity that we are going to take out hopefully this week. I want to see, as long as we keep respecting bullish PDRAs from now on, then I want to see us come seek liquidity on the buy side. Right now we've taken liquidity out on the sell side. So on the 1 hour time frame, so quickly on the 1 hour time frame, so this trade was based off my my conviction. So it happened right here. So when price did what? When price dropped way down, we had this huge drop. We took out the sell side here. We took out the sell side liquidity resting below here, right? So we took out the sell side. All this equal lows were taken, and then we started retracing higher. Started going higher, not really higher, but we did what? We took out buy side liquidity right here. So I'm showing you what actually prompted me to take the trade. So the moment we did this, we took our buy side here first, created this eye, and we took our buy side there, and then it was handing out to me that, whoa, something is about to happen. Yeah. So as you can see, we took out that buy side, and also we happen to what? We happen to fill this fair value gap right here, this 1 hour fair value gap. So as you can see, if you look closely, right, so we did what? We created this fair value gap, price retraced into this fair value gap, filled it while taking out buy side liquidity. We took out buy side liquidity, and after taking out buy side liquidity, we did what? There was a shift in market structure, but price did what? Tricking people into thinking that I want to go low. So people that chased this down move, price did what? Took them out again, taking out another buy side liquidity, which is what? The double purge, I'll say. So we took out buy side, took out sell side. Those people who sold here, took them out, and then again we took out buy side again, and then price gave us what? A shift in market structure. This is a shift in market structure when you have this consecutive down close candle taking out buy side liquidity, sell side liquidity like this. This is a shift in market structure, and the moment we had that, it was handing out to me that, oh, something is about to happen. So right here we have this high, this candle's high, this low, and this higher high is what, and then we have a lower low, is what we refer to as this right here. From this point, this candle, this bearish candle is a breaker, an ICT breaker. Okay, so let me explain it once again. When we have a scenario where we have a high, then a low, then a higher high taking out this low, and then we have a lower low taking out this low, the boldest, strongest, with large body bearish candle in that scenario is what we call the ICT breaker block. So you draw your rectangle from the body of the from the close, from the open to the close, and then you wait. Sorry, it's supposed to be a breaker, so a breaker block. So this is an ICT typical bearish breaker block. So when we have a high, then a low, then a higher high, this high is higher than this high, and then this low is lower than this low. That is a typical ICT bearish breaker block. So the moment we came out of this, we took out this low. I was waiting to see price come back, retrace back into this breaker block, and then I'm going to take a sell, because like I said, I was expecting what? I was expecting price to mitigate the other block. So like I said, I already have a monthly conviction and a weekly directional bias. So I was expecting to see something. So that is going to be my framework for the trade. That is why I'm going to be, because I'm expecting price to drive towards that direction. Now I'm now looking for setup to what? To resonate with my bias, and then take trade based off that setup. So the moment I saw this, it was handing out to me that yes, we're about to go lower. So in this case, I quickly so when I had this, and then you can now take it into the lower time frames. You can take it into the lower time frames, and as you can see, the moment we had this retracement right here to this consequent encouragement. So consequent encouragement is the 50% level of your breaker block or your fair value gap, whatever it is. So you can use your Fibonacci tool to do that. So right from this point, from the top of the rectangle to the low of the rectangle, so you draw your Fibonacci level, and this middle point right here, this is the 50% level. That was where I took my trade. So I quickly took a short position from this point right here, as you can see, and putting my stop loss. My stop loss was just few pips from this close, because I wasn't expecting, yeah, it was 10 pips. So I wasn't expecting price to do what? To close above this breaker block. So a valid breaker block usually would hold price at the 50% level. So you don't want to see price run through this. I mean, the moment I see something like that, if for an instance I see price came up this way and closed with the body here, then I know it's not a valid it's not a valid breaker block. That breaker block did not hold price. I want to see what? I want to see the 50% level of the breaker block being respected by price. So the moment I saw this and I saw this and we had to come back, then it handed out to me that yes, this is respecting what's price, and then price is respecting this bearish PDRA, and then I took the trade. I didn't target the other block. I only targeted this low right here. This was the target. So as you can see, just moment we tapped into this point, this 50% level again started dropping down, and we took out this sell side liquidity right here, and that was it. That was the trade. I was done. I didn't need to take more trades, or I didn't need to target the other block, even though price went way down further. Even though price did that, I still didn't need to catch all of that move. Just this is enough, because if you can have this setup at least 2-3 times in a week, then you're good, as long as you know what you're looking for. So this is a trade that I took this week, and I felt I was going to share with you guys. And also at the release of NFP this week, on Friday, I was expecting this sell. In fact, I made a video saying that we're going to drop down, taking sell side liquidity first, and then we start attacking buy side, because Basically, I already have a conviction that if we are to drop into this order block, fill it, and then we start retracing back to attack um, um, the buy side liquidity. So the moment we got into this and then we started going higher, I know people, a lot of people would have bought, a lot of people using supply and demand, a lot of people using so many things, whatever it is you are using. In fact, ICT traders sometimes to get it wrong and then start buying. And then when they got to this point, I was expecting what? I was expecting NFP release to take out all the liquidity. NFP is not a news release that I would recommend for anybody to even trade. It's usually gambling. That's what I see it as. Just like my mentor taught us to stay away from NFP because capital preservation is very important. So we took out the sell side, and the moment we took out the sell side, I knew that now I want to see us driving upward. That is going to confirm my what? My directional bias. So from this point, maybe, just maybe, we can take out this liquidity right here, or maybe right here. But I would want to see us take out liquidity. In fact, I believe we can come to this point and then see price drive higher. Why? The reason for that view is because what I see here, if you see what I see, I'm coming, let me zoom this in properly. So this is the 15-minute time frame. We did what did we do? NFP came slamming down, taking out sell side liquidity, resting here. All those people who bought right here or have their stop losses hanging around there, we did what? We got them liquidated. Sell side liquidity was taken, and then we retraced up, creating this high, and then we took out this sell side liquidity again. Then boom, we created a swing high, and price did what? Took out this swing high. Noting that this is also another block right here. This is another block. In fact, this is amazing. So this is another block. This kind of other blocks are other blocks that takes out liquidity. So I want to see the 50% of this candle's body being respected. I don't want to see price trade down below this. So this is another block because we took out liquidity right here, created this swing high, and then we took it out. We ran this shift in market structure quickly. This is an aggressive move. So this is what I would like to see. And at the moment we created this high, we retraced a little down into this other block and then started going high. But I would want to see us take out this sell side liquidity right here. Those people who bought here and those people who have their stop losses hanging around there. So I want to see price retrace, take out this liquidity, come into this fair value gap right here. So you can see we have this fair value gap. Like I already explained, fair value gap basically is when we have three candles, three bullish candles or three bearish candles, it doesn't matter. And when we have the first one on the left, the wick of it not overlapping the body, and of this one, when we have the wick, the low and the high of this candles, this right candle and this candle, when they are not overlapping the body of this middle candle, that is a fair value gap. The space between the two candles is the fair value gap. In between this body is a fair value gap. So we have this fair value gap right here, and I want to see us retrace into this fair value gap. So price will do what? I want to see us come, take out the sell side liquidity, those people who have their stop losses hanging around here, and we fill in this fair value gap, and also happen to be in an order block, a 15-minute order block. So all of those things, if you look at it, it's a framework on a good trade, So like I said, I already have a conviction, a directional bias. We've done one part of it. Now I want to see us start driving higher. So this could be a trade that I'll be taking maybe after the open Asian session on Monday. So if we can get this set up, then I'm going to be taking a bullish trade. So right now, from now on, I want to believe if we keep if we don't get out of this weekly bearish candle, this bearish order block, weekly bearish order block, if we respect it, just like I drew back here, like I said, I was expecting price to come into this. If we respect it, then I am going to be bullish on cable. I'm going to be very bullish on cable and hoping to see higher prices. I want to see us right here. This is going to be my target, at least for the first trade. If you look at it, you can target here from this setup. So I'll be taking a long position, maybe from the top of this fair value gap, right? And then my target is going to be here, and my stop loss is going to be wrapped around this order block, because I don't expect price to do what? To drop and then close below this order block. I don't even want to see it get to that point. I want to see respect the 50% level. If price respect the 50% level of the order block, then it's a strong conviction that the we're respecting bullish PDR raise. So that's going to be all of it for this video. Please, like I said, I'm a developing YouTuber. I make content based on my perception, but I really want to hear your opinion on how I can improve my videos. If there are specific things that you want me to touch that I'm not able to touch, I would honestly love your opinion on them. Leave them in the comment section so I can it's going to help me improve myself, the quality of my videos, and how I explain it. So that will be it from me, this video. If you're new to this channel, please hit that subscribe button, turn on the bell icon to stay notified of all the videos that I'll be coming. I'm going to be uploading videos every weekend. I'm going to be giving you guys videos every weekend, so that just to keep my, also I believe YouTube algorithm is about to start picking up on my video. So please share this video with your friends, share with your families, those people that are in need of this. Please share to them. Until I see you on the next one, thank you for watching.